help a few people. I mean, a few is better than none, right? And hopefully the masses will follow. But so again, thanks for having us today, guys. We're going to be covering some supply demand methods, and you just be aware that this is actually what we actually trade every day. Okay. There's a couple things that we're going to add to what was in the description. So, for example, we're going to talk about 3 methods of trading supply demand today, but we're also going to talk about institutional order flow. How to locate that on a price chart and so on. Granted, we have 1 hour, so we need to get started. It is always my goal to get as much information across as possible in such a short amount of time. Okay. At the end of this, if you want to visit our website, of course we appreciate that. It is purefinancialacademy.com, or if you have any questions during or after the event, you can always feel free to send those to us also at support@purefinancialacademy.com. Okay. Okay, so let's go ahead and get started. We got a quick PowerPoint that we're going to get through, and then we're going to get out to the live charts because that's always the fun, right? So let's move forward. Okay, first thing we need to do is just cover an obvious statement, but this is for educational purposes only, traders. Trading does have, of course, risks and rewards that we all need to be aware of. And any trades that, of course, are placed upon reliance on any education that you may learn today, then that's going to be placed at your own accord. Okay. All right. So as I stated, we are going to talk about 3 ways to trade supply and demand. All right. So what is supply and demand? Well, in order to truly understand the movement of price, okay, and literal price action, doesn't matter the market, doesn't matter the time frame, but in order to understand that, it's imperative that you understand what supply and demand is. Okay. Also, how does it excuse me, guys. How does it? A little humor in the room never hurts, right? How does it affect the value of any given instrument? Okay, whether it be you're trading forex, futures, equities, okay, options. I have people ask me all the time, well, can you trade? Can you use supply and demand in options? The answer is absolutely. That's the only way that I would trade options. Okay, so we'll get into that a little bit later. Not so much trading options, but how supply and demand is relevant. All right. Okay, so we talk about what is supply and demand, and again, just bear with me through these slides. I promise you we'll have some fun. So supply and demand is nothing more than an economic model of price determination in any given market. It does in fact conclude that in a competitive market, price will function to equalize the quantity demanded by consumers and the quantity supplied by producers. This is going to obviously result in an economic equilibrium of both price and quantity. All right, so I'm not sure if you guys can see my, let me see here if I can get you a, well, that's okay. It's not imperative, I suppose. I was going to look for a mouse pointer here, but nonetheless, what I want you to do is focus in on this below, okay? And the first thing that I'm going to, just state here is simplicity is key, right? So, there's a reason that people say that, the simplicity of buying low and selling high produces a lot of financial status, right? A lot of income. Well, there's a reason for that. It's because it's so very simple, right? But yet when we get into the market, we think everything's different now, okay? No longer do we want to buy low and sell high because that's too easy. We need to throw these indicators on the chart because I can't see it on a price chart without an indicator, right? Well, no, that's not accurate. We can absolutely see everything that we need to know based on pure price action. So based on this diagram, if you will, that we have up, notice that there's a red supply, I'm going to refer to this as a zone, but there's a red supply zone above, a blue demand zone below. Okay, to the left you have price, to the bottom there you have quantity. What I want you to take away from this is nothing more, nothing less, that when price and quantity find one another, okay, you do not want to be at an equilibrium. That's what we call diddling in the middle. It's a very low probability. Oftentimes you find a lot of choppy zones and so on there. Okay. When there is more of a supply, okay, in other words, the quantity, all right, is higher on the price, therefore you're going to find more of a supply for that particular instrument, you're going to expect prices to drop. When there's more of a demand for that particular instrument, obviously we would look for price to increase on its own there. Okay, so again, remember, we don't want to be into the markets at states of equilibrium. The reason for that is because if there is indecision in the market, it's just like every other aspect in life. If the decision is made very easily, okay, that's not equilibrium, right? In other words, if you know very quickly that the markets are undervalued, okay, that's not equilibrium. That's off of equilibrium. Okay, so the price would move very quickly. Let's move through this so it makes more sense on a price chart. Okay. Price, in fact, moves back and forth between these supply and demand levels. So, I've been all over, guys. Trust me, we've all done our research. I'm sure that everyone in the room has heard of supply and demand before. But let me take this a step further because, some people, you can call it whatever you want to call it. Supply, demand, trade. It literally, make up a name if you want to. It's irrelevant. What I'm most interested in, supply to me means nothing more than institutional order flow, meaning there's more sell orders than buy orders. I don't care what you want to call it. Again, supply, it's just another name for it. It means there's an abundance of the sell orders. Demand is in fact an abundance of buy orders. And again, the only thing that I'm interested in is where are the pile of orders sitting. Okay, they're all over the chart. We just have to learn how to look for them. So again, price literally moves back and forth from one pile of orders to the next. I'm going to prove this to you today, kind of a perfect example. But nonetheless, just understand that wherever the pile of orders are, those literally are like magnets. Not only is it going to pull price towards it, okay, but it's going to push price away from it after it is reached as well. Okay. Supply, when supply exceeds demand, there's going to be a turn in price action, and price is then driven down due to the quantity of goods being produced and the lack of goods for those particular, the lack of demand for those particular goods. And as I stated, guys, supply is nothing more than an abundance of sell orders. So supply is equivalent to we want to sell the market, right? It's where a lot of the institutions are stepping on board. Okay. What does it look like on a price chart? Anytime you see these large candles, a lot of people refer to those as ERCs, otherwise known as expanded range candles. Now, all that really means, and again, I'm trying to simplify everything here, but an expanded range candle is simply a candle that is larger than the majority of the other candles before that particular candle. Okay, so in this scenario, you can see here that we have a very large, very large red candle that drops. And so that would become an ERC because it's much larger than any of the candles you see before it on this entire price chart. When we come back to revisit that particular area for the first time, that is when the institutions look to place their sell orders. Okay? If you think of yourself or any other professional as a technical analyst, okay, which is exactly what we are. We're analyzing price, right? I would believe that all of us in here are technical analysts. So if you're a true technical analyst, why look at the markets any different than you do every other thing, right? We're going to analyze price, and we as an individual are going to over or undervalue. We're going to place a value on that market, okay? Where we determine that the markets are overvalued, we want to be a seller. Where we determine that the markets are undervalued, we want to be a buyer. Why do I stress that we as an individual are a technical analyst? Because we have the ability to do this, right? You go out and you purchase a home, you don't just randomly go throw money at it, you make an offer, right? Everyone knows that. So you go out and you make an offer. You have now valued that house at what you're willing to pay. So when you look at the markets, look at it the same way. We want to tell the market not what it wants to hear. We want to tell the markets what we are valuing it at and what we're willing to pay. Okay? Kind of skip through this a little bit faster, guys. Demand's just the opposing. Obviously, when demand exceeds supply, there's going to be a turn in price action up. Okay? All right, that's due to the quantity of goods being demanded and the lack of supply for those particular goods. All right? This is what it looks like on a price chart. We have an extreme rally up in price, and of course, if you look back to that left portion there, you will see, in fact, an ERC, expanded range candle. Okay, so focus in on that. When we come back to it the first time, you can see how the institutional order flow steps in and pushes price all the way back up to revisiting supply. Okay. All right, so we talk about peaks and valleys, guys. These are just another name for market turning points. Peaks do refer to the top of the area where price turns down. Okay, so if you want to use another terminology, peaks would be equivalent to swing point highs. Okay, peaks and or swing point highs can often become areas of supply, and they are created by three price patterns: a rally, a base, and a drop formation. Okay. Valleys do also become areas of demand. Notice I said a separation there. Peaks become areas of supply. Valleys become areas of demand. These are going to be created by a drop-based rally. Okay? These formations are created by the imbalance between the supply and the demand. Now, there are specific price movements that do determine the peak and valley formation. So peak, like I mentioned moments ago, it is a rally in price, a base formation, and then a drop out of that particular level. The valley is exactly the opposing. Okay, it's going to be a drop in price, a base, and then a rally out of that particular level. In our class, we actually teach you, 80% of the time, peaks and valleys are nothing more than retests of original levels of supply or demand. We won't go into that heavily today, but understand this. If you are a pivot trader, you are not trading the same method as us, guaranteed. We do not trade pivots, okay? It's very rare. As a matter of fact, today was one of the very rare opportunities that we will be willing to take a pivot as an area of supply or demand. We'll talk about that a little bit too, okay? All right. So the rally-based drop, you can see that we have four, well, technically there's five, as one has two inside of it. But there's about 5 rally-based drop or peak formations that we have on the price chart. And if you really analyze these, notice what happens every single time we come back into the previous, right? Okay, literally 100% of these. Every time you come back, there is yet again another turn in price, creating another peak. So as I stated just moments ago, remember, a peak, 80% of the time, is going to be a retest of a previous level, not an original level of supply or demand. I hope that makes sense, and we will cover it on the price chart. Drop-based rally, these are our valleys, and they look almost identical, just opposing sides to the peaks, right? So if you think of mountains, you think of peaks being the top, the valleys being the bottom. Okay? Same scenario. Notice what happens every time we come back into one of these valleys, we get a large rally in price. All right? They are, in fact, all retests of previous levels. Continuation patterns, okay? They refer to an area in which price obviously showed continued strength or weakness. A DBD is a drop-based drop, okay? And these are bearish formations, and they're created by a pause in the directional movement to the downside, all right? These are or become excellent opportunities, absolutely excellent opportunities. We'll also look at a trading opportunity that we just placed based on an RBR today as well. Okay, so rally-based rally or RBRs are the bullish formations. These are also created by a pause in the directional movement, but this is a pause in the upward directional movement. So where the DBDs are going to offer us great areas of supply, the RBRs are going to offer us great areas of demand. As stated before, I believe they mentioned to you that this will be recorded, so just kind of bear with me as I'm moving very quickly. I prefer that we get out to the live charts so it makes more sense. You can go back and review this at any time, guys, so and I do recommend that you do that. Okay, this is what a DBD looks like on a price chart. Okay, we have a drop in price, a small base, and then a continuation to the downside. This is significant, and it is signifying that the imbalance is still off at that particular level, that the sellers have consumed the buyers. Okay? Layman's terms, the sellers are in control. All right? The opposing is the RBR. We got that rally-based rally. It's the same, only to the upside, right? We have a rally in price, a small base, and then a continuation move to that, to the upside. So this is also telling you, it's signifying that the bulls are in control, okay, and that they have now consumed all of the sellers that were in that particular area. All right? Okay, so we're going to talk about 3 entry methods of supply and demand levels, right? Entries, and this is imperative, and I'm putting major emphasis here, entries are always at levels of supply or demand. Now, before I move into this, am I saying that this is the only way to trade? Am I saying that anyone out there is doing anything wrong? Absolutely not. The way that I look at the markets is, are you making money or aren't you? If you are, continue doing what you're doing because obviously it's working for you, and that's great, right? But ask yourself the question: am I making money, and am I making money consistently? Hopefully you are. Okay, but I just wanted to throw that out there because I definitely don't want that to be the notion. So our first entry method is going to be limit orders. This is the most basic method of entering on supply and demand levels, and it is absolutely the way that I trade every day. Not that that matters to you, but this is the way that I choose to place all of my entries. I love limit orders, guys, and I trust the levels. So it takes a lot of time in order to do this, meaning to trust the levels, but limit orders literally place the value exactly where you want it. So you are essentially telling the market, I know where I'm willing to become a buyer or seller, meaning I'm making an offer, either accept it or don't, but this is what it is. Okay, so if you go out and you purchase that house, you are literally, let's say they want $500,000, but you don't have that much, right? Maybe you have that much, but that's all you have, okay, or whatever the case may be. You know that you can spend $425,000, but that's it, right? So what are you going to do? I'm going to go and I'm going to offer them 400 and whatever it is up to your amount, $425,000. If they come back and say, we just can't do it, 400 and 460 is as low as we can go, you say, okay, I appreciate that, and what do? You go find a new house, right? One that will accept your offer. So let's look at the markets the same way, and it really adds probability, guys, okay? You'll see this in a moment. So limit orders, my favorite way. Limit orders give the ability to set it and forget it. I know you've heard that term. So we want to set it and forget it so you can walk away from your computer screen. I don't want to sit here all day. It's very boring, okay? Can be very or emotionally consuming. I tell you, you talk about anxiety, right? I think if you sit and stare at this thing too long, they probably run out of Xanax in the world, right? So the next entry method, guys, is to use confirmations. Confirmations do offer a sense of comfort for a directional change, and I will agree with that. Okay, so as a beginning trader, you may choose to use a confirmation entry. There are ups and downs to everything. While it does make you feel, maybe more of a sense of comfort, okay, you have to understand that you're getting in at a worse entry, right? In other words, your entry is not going to be as low in demand or as high in supply as it would have been using a limit order, because obviously you're waiting for price to turn. Okay, so an example of that would be a close above or below the previous candle. All right, it's just one form that a lot of people use as far as a confirmation. All right, the last entry method, we talk about bull and bear traps. Okay, bull and bear traps offer extremely high reward market turning points because it comes after sweeping stops, right? Yeah, high probability. Why would it be? Why would I put emphasis on that? Why is it such high reward market turning points? Because it's due to massive order flow, right? Which is equivalent to a great time to buy or sell that particular instrument. All right. So in other words, guys, if we're moving up in price, we're coming into let's say an area of resistance. Okay. Generally, the conventional thought process tells you that if we take out a high, right, a pivot high, then we break out to the upside, right? That we become a buyer, and that's exactly what we want everyone to believe. Because as a supply demand trader, you can step right in after sweeping those stops, because in order to sell the market, in order to sell the market, all right, what do you have to have, right? We have to have buyers, okay? Wouldn't that make sense? So in order to sell something, you got to have someone to buy it from you, right? Is there ever going to be a better time when we break out of something? Because not only do you have traders who have previously sold, they just got stopped out, so that order turned into a buy order. You also have the breakout traders buying after a pivotal, after a rallying price, after a pivotal high too. So you've more or less doubled the amount of buy orders that are sitting in the market, and the institutions know that there's never going to be a better time to gobble them up than right then. Okay, that makes sense? Hopefully everyone's with me. I appreciate your guys' patience on the questions, by the way, too. So I do promise you that I will do a Q&A as well. I know that a lot of you probably have some questions. So we'll move a little bit faster. 3 ways to trade supply and demand. You got to understand that consistency is key to any style of trading. It's rule-based, right? So we now talked about our entry methods, but let's talk about the 3 actual supply and demand methods. We have reversals, continuations, and we have trend following. Reversals, guys, it's very, everyone knows what a reversal is. It's a trend direction being no longer intact. Supply and demand shows itself. Okay, this is important. At areas of reversals, supply or demand, dependent upon the direction you're going, will in fact show itself. Okay, it has to. Otherwise, there will not be a reversal. So these are very important little footprints in the market that we want to be aware of, though we can trade with them. Okay, so applying the larger time frame analysis is what helps us determine the potential reversals. Okay, so we'll drill that down. We'll use the large time frame for potential reversals, okay, as well as butting our head up against major support resistance. All right, smaller time frame for our trend and level analysis. The next is the continuation patterns. These are momentum moves continued by another momentum move in the same direction. Okay, price moves sideways at or near a level. The order flow is being consumed, and this is very important that you understand this. Okay, order flow is being consumed when you just sit at a particular area. It doesn't matter where it is. It's that indecision. Okay, so think of it as, you know, if you have 10,000 sell orders, the buys move into that level and sit there. Just think of it like a what's the machine at the casinos, the one that you pull the handle down. I can't even you guys know what I'm talking about. Just think of it like that, right? It's ding, 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 ding. Every single order is just literally being used up over and over and over again until eventually all 10,000 of those orders are now consumed, and then we push right through it. Okay. The last is trend following. This offers low risks, high reward entry points with the overall direction of the trend, okay, or price. In an uptrend, we want to play the pullbacks into demand, and in a downtrend, we want to play the pullbacks into supply. All right. Not really going to talk about this, guys. This is our automatic supply and demand zones. Of course, we have that automated on the chart. If you are interested in that, we'd be happy to give you all the information that you need. Just visit our website, okay, and you can get all the information. I'm going to get you guys out and do some education so that you really enjoy the rest of today. But again, if you have any questions about that, just visit our website, okay, and you can see the videos and everything and how that actually works. Okay, let's stop the application sharing now. Let's go ahead and get out to the live charts. That's always the most fun, in my opinion. Okay. Yeah. Thanks, Andrew. Absolutely. It's a slot machine. How did I not know that, right? Wow, it takes a genius, doesn't it? I tell you. You know, listen, I'm a simple guy, you know. Never claimed to be a genius. Good thing, too. All right. It's why I love trading, because it's very simple, right? Absolutely. All right. Well, we do. All right. So here we go, guys. Okay, bear in mind we're only here for an hour, so I'll do my best to teach you as much as possible. Okay, so we've talked about 3 different methods to enter supply and demand levels. We talked about what supply and demand was. All right, it's nothing more than little pockets. Okay, and they're all over the price chart. You'll notice in here that we have a lot of we have a lot of zones drawn in on our charts, okay, a lot of lines, if you will. These are areas, okay, that the pocket of orders are residing on the exchange. So I want you to think to yourself really quickly, if I want to be a buyer or a seller, doesn't really matter, either way, what do I want to do? I want to be a buyer or a seller the same place the institutions are being a buyer or a seller, right? The same place that, you know, all of the other professionals are doing it. So we look for areas of these supply-demand imbalances to know, and I use the term know very easily because we never know, nothing's 100%, but to add probability, we look for these pockets of orders sitting all over the price chart. All right. Let's drop to the smaller time frame, and we'll look at a couple of entries we had today, help you guys understand what it is that we're talking about. All right. So today we come in, and something that we're going to do is always look above current price, and we're going to look below current price, and we're going to ask ourselves, if I'm trading at X amount of, whatever the instrument is, for here we're looking at the NASDAQ. If I'm trading at a particular area, so for example, we came in this morning and we were trading way down below, well before this extreme rally in price. Okay, so if we were trading approximately this area in through here, okay, we want to value the market. We want to look above current price, okay, and we want to look below current price. And then we want to ask ourselves the simple question, okay, have we been there before, right? So every little pivot point that you find on the chart, ask yourself the simple question, have we ever been there before? Now, you've probably heard the term fresh versus unfresh levels of supply or demand, and that's great, but I'd like to take that a step further, okay? Fresh versus unfresh levels, let me explain to you what that is. Okay? It's one question. That's all that you need to ask yourself. Have we ever come back to revisit that level before? It's always a yes or no answer. There's never maybe. It's yes or no, right? In other words, if we draw in this level and then we ask ourselves the simple question, right? Have we ever been back there before? Well, the answer is clearly no, right? This was as close to the level as we came, and that's a grave distance away. So the answer becomes no. If the answer is no, we've never been back there before, then you clearly have a fresh level of demand. However, this is where I'm going to take you a little bit deeper into the rabbit hole, I guess, so to speak. An original level of supply or demand, very different from a fresh level. Okay? So while we know that this level is fresh, there's no way that I'm going to place a limit order there to buy the market. Okay? I'm not interested. I'm going to tell you guys right now, tomorrow in our live room, I'm going to say the same thing. I'm going to come in and I'm going to say, no way, guys. There's no way I'm interested in buying the markets here. Okay? And a lot of people say, well, why not? Okay? And it's always the best question you can ask is why, right? But they'll say, look at the rally in price. And they'll say, there's a clear imbalance here. A lot of demand took place and so on and so forth. And I agree with you, but to take that a step further, I would then say, why did the demand form in the first place? Okay? So after you ask yourself, have we been to that area before? Ask yourself another question. Is there a reason that that particular area formed in the first place? Okay? The answer here is clearly yes. Look at all of these previous pivot lows, which is why I'm teaching you that we don't trade pivot lows. Okay, so in other words, you have the original pivot back here. You've now retested it here, retested it again here, and here. So how many times would you expect this level to hold? Okay, not very many. And this is great for us because this is how we look at the markets on a daily basis. When we get back to this level, am I saying that it's impossible for it to turn? No, guys. Of course I'm not saying that, right? But what I am saying is that the probability, if we get back to this area, the probability now lies with the sellers, not the buyers. It's very important that you understand this. Okay? The difference between original versus fresh levels of supply or demand, very, very different. Okay? So if we pull back on a price chart, I want you guys to, anyone, I'm not saying everyone, but anyone that's very interested in supply-demand trading, I want you to go back and I want you to start doing this. Okay? All right? This is an hour chart, guess. 6. Yeah, this is an hourly chart. 60-minute, hourly, whichever, same difference. Okay, so what I want you to do is go back on the price chart, and every single time you get a large rally or a decline in price, I want you to mark that level. Okay? And what you're going to then come to find is that, generally speaking, so if we really go back and scroll kind of deep back into the level, notice these pivot points. All right, and what I'm going to do here, I hate to kind of remove all of this drawing objects, but it is what it is, right? Let's kind of do this for video purposes. So we're going to remove drawing, okay? Take a very simple tool, your horizontal line. Go back to your peaks and valleys, okay? And then do the simple analysis and ask yourself, is there a reason that we turned there? Scroll back as far as you have to go. Let's use this top here, okay? Notice this level above. Look at what it's actually coming from. Does everyone, am I resonating this? Does it make sense how peaks and valleys, or swing point highs and lows, pivot points if you will, are not the areas of supply and demand that we're generally interested in? Okay. Hope that makes sense, right? And again, you can go back and really do this with any of the pivot points you want to, okay? And you're going to find that, generally speaking, like I said, about 80% of these are in fact retests of previous levels. All right? So let's move back into today's trading and say, okay, well, why would we have placed the trade that we did today? Okay. So if you guys can see, let me just explain the trade very quickly. So we're currently short the NASDAQ. Oddly enough, you're going to think this is quite unusual. Okay. We're actually short the NASDAQ and long the S&P right now at the same time. Extremely unusual, right? Well, maybe, okay? But again, what we're interested in is the pocket of orders. I want you to think, TD, I'll come back to that question, I promise you, just so we'll have time. Think to yourself, what if a catastrophic event happened, right? Okay, so I want to think, and I hope that never does, guys. I hope that catastrophic event never happens. We know that it does, but I hope that, I never hope for that. But let's say that some catastrophic event happens. Let's say an earthquake, or whatever the case may be. I don't know. An exchange has some technical issues or whatever. Okay? Ask yourself this question. If there is more sell orders than there are buy orders, what's going to happen? Does it matter that a catastrophic event happens? Does it matter that bad news or good news or any news comes out at all? No, because irrelevant. No matter what you think okay, about price in the given direction. I have to tell myself this every day, but meaning whatever the bias that we have in the market is, if the order flow, okay, is excessive in one area, okay, meaning the sellers are outweighing the buyers or vice versa, it's an impossibility to go through that level. That makes sense? Again, it's very important that you guys, understand what I'm saying as I'm saying it. So if if I'm, going too fast, hopefully I'm not. So let's go back and look at this level and say, you know what, that's great, but how can we apply this on the price chart? Well, this morning we came in, okay, and we noticed that we have a good level of interest, and that's what I refer to, my levels of supply and or demand, right? Order flow. It's all I need to know is, do I personally think that there are more orders, more sell orders there, or more buy orders there? So when I came in, we look at this level, and this becomes a level of interest, and so I ask myself the simple question, okay? What do you guys think I asked myself this morning? Anyone want to take a stab at what the first question I asked myself was? And type that into the Q&A there. What do you think the first question I asked myself? Well, don't be shy. It's okay, guys. Okay. What do you think the first question I asked myself was about this level? That's a good thought process. Sure. Yeah. Exactly. Guess for. That's right. Is it a fresh level? That was the first question that I asked myself coming in, looking at this level. It's always the same question. Is it a fresh level? Okay. Now I need to ask myself another question. The level of interest that I am looking at, okay, let me now format this, and what I'm going to do is extend it to the left and not to the right, okay? I'm going to then ask myself whether only if the level is fresh, of course. I'm going to say, is the level original, right? So if I go back, scroll all the way back, scroll back until I find, okay, that particular level. See this line right here? This is the line that I had drawn in. Let me tell you what, let me do this. Let me remove all of these other lines so that it makes more sense, right? So can you guys, does everyone understand how these are the two lines? Okay, this was the level of interest. So I then scroll the chart back, okay, until it, and I get this question all the time, how do you know how far to go back? You don't. You go back until you can't, right? In other words, if there's no price action there, you continue until infinity, right? Yeah, absolutely. As far back as you need to go. If it's a day or a year or 10 years, it doesn't really matter. So notice back here, I want you to notice something. If I follow this all the way back, okay, I want you to notice how there is no supply right here. There's no supply level. This is a supply level, okay, and then we come back to retest that, come back to retest that. But notice what we do on this particular peak, right? Does everyone see how the top line here is not within a previous supply level? Does that make sense? Okay. If the level in itself, the level in question, if it's an area of supply, we're going to use previous supply. If it's an area of demand, we'll use previous demand. Okay. We're not talking about cutting through candles, and we're not talking about support and resistance. I ask myself the simple question, is that area of supply within a previous area of supply? And the answer to that question is no, it's not, because we penetrated above the previous level of supply. So for that particular reason, it says to me that this is an original level of supply. That simply means that it formed in the middle of nowhere on its own, right? Absolutely. It just formed on its own. There's no previous supply that created it. It's just new, fresh order flow. Okay, so there's still a very large pile of orders just sitting there. Okay, and if they're just sitting there waiting to get filled, where do you think I want to be a seller? The same area the institutions are selling, right? Absolutely. So this morning, okay, we come in, we place a limit order. You can see that we had our fill there at 26.94 halves, and we've already taken off profit target. We took our first profit target at 83 quarter, 26.83 quarter. So right in here was our profit target. We can show you that in a moment if you'd like to see it. No problem. Okay, but so we've already done that, and notice where our break. See this right here? Okay, we've now moved our stops to break even plus commissions. So already making profits in the trade, there is no way to lose, right? Okay, does that make sense? But the reason that we still have a contract down here is because of a path. Sorry, I moved that. It made us because of a path of least resistance. Okay, the only area in this entire zone that I have drawn now, any form of demand has stepped in, would be right here. Okay, let me see if I can. Well, that's not working for me very well. There we go. Okay, this area right in through here, this is the only area in which the buyers have now stepped in. So the question remains, are we going higher or are we going lower? Okay, so we're looking at larger time frame, so we're going to use the selling there, right? And we'll hold off on this. So let's go look at another market. Okay, we actually in all of these trades, I take that back. Excuse me. The Nasdaq was not presented in the live room this morning. Both the S&P and the Dow were. So let's go take a look at those. We actually did have an entry at the 13,220. And we couldn't get a fill. I mean, we literally got hit on the tick. You can see our zone that we had drawn in, and again, this was done in the live room this morning, hours and hours in advance. But then we come back and we literally hit our entry, and it's just sheer luck that we called it to the tick. But luck doesn't do you very good with a call unless you get filled, right? But we did get our fill on the S&P. So we talked earlier in the video or in the session about RBRs and DBDs, right? These are continuation patterns. So they often refer to areas of supply or demand. You just have to ask yourself, is it a fresh level and is it an original level? Okay. All right, so I'm going to cover this trade very quickly, and then I'm just going to do a quick Q&A session, okay, because I see that we're running out of time here. Never enough time, guys, to teach what you want. And I need to be very upfront. Learning to do this takes a good, while, but once you do learn to do it, it becomes very simplistic, right? So this morning we came in, and the S&P looked very different from the NASDAQ. So let's go back and let me show you something very quickly, okay? Why would I not short the S&P? Okay, why did I not want to get short the S&P? You see where this rally-based rally happens? So if we remove all, the Dow, I apologize. Let's remove drawing, okay? And I'm going to scroll back, okay? And I'm going to ask myself, remember the two questions, okay? I'm going to grab a horizontal. I'm going to go back and I'm going to look at this, and most people would say, well, I take that back. I can't speak for other people. I can tell you that my experience with traders, and that's just coming from the live room and so on and so forth, most of them would say this is an area of supply in which we'd look to get short the markets and so on and so forth, right? Okay. Notice where we're coming from. So why was I more interested in selling the NASDAQ as opposed to the Dow? Because we had original supply on the NASDAQ, but we didn't on the Dow. Notice what happened. Okay? Notice what happened. This is the exact same peak, guys, okay, that we just saw on the NASDAQ. I'll open this back up. Okay, so we scrunch this back in. Okay, see that right there? Notice this peak back here. Remember, we'd already violated through it, right? So original versus non-original supply. That's the only reason. Okay, so if we go back over here and we look at this area, we would anticipate that we would actually push through that area. Reason being because it's not original supply, right? The orders have already been used up. That makes sense? Okay. All right. However, this level was absolutely fresh. Okay? This level right in through here. There we go. If I can mark it right, we had it to the 220. Well, you get the idea. Good enough. All right. So this level, it was just a new pile of orders, guys. That's what it was. And it acted as a magnet to pull or drive prices right back to where it wanted it to come. Make sense? Okay. Same scenario on the S&P. Okay. We look at previous areas. All right. And we say to ourselves, is this an area where I would be a willing seller or willing buyer? Two questions. Is it fresh, and is it original? Okay. If you guys look on our trading blog, I believe in the left, if you go to purefinancialacademy.com, you can visit our trading blog via the top of the website there, and you can actually go back and review a pretty recent video there in which we sold the markets out of this level. Okay, so all of these levels that you see on the price chart, these were actually presented in the live room, but this right here was a great trading opportunity. So we had the capabilities of getting short the market, and then we turned right back around and took it right back to the upside. Okay? So we're looking at, literal order flow back and forth. Okay? And it's quite amazing, even to myself. It's just amazing to sit here and watch it, bounce back and forth from level to level to level. So, let's do a Q&A, guys. I don't want to take up too much of your time. I only have about 12 minutes left here. Just focus in, guys. Hopefully that helps you. The three ways that we talk about trading supply demand, we've got limit orders, okay, is my favorite way of doing it. You can use confirmations if you choose to, and then there's the bull and bear traps, of course, okay. To define this, let me help you understand how I would place the trade, just so I'm very clear. I'll show you how we did place the trade today. When I use limit orders, again, this is how I always place my trades, okay? When I'm looking for an entry, all right, I'm already, the order is already sitting there. In other words, when I was looking at the chart like this, and again, you can go back on the trading blog and you'll actually see this, but I had my order sitting up here at the 21.5, 1421.5. It was just sitting there. And I said to myself, look, I don't care when price gets back there. I'm just going to trade with that pile of orders, right? So, I had to be patient. We ended up trying to take a long position down below, okay? We ended up getting back to supply finally, so we short the markets, right? But look at how long it takes to get there, right? Sometimes it takes a while, yeah. And so after that, the trade that we presented in the live room was this long opportunity just below as well. And so you can see now that that was very nice too. Okay. All right. So, all right. Let's wrap this up with a Q&A. We'll try to get as many questions as we can before we exit the room. I'm going to try my best, guys. Let me see here. Okay, I'm just going to kind of run through time frame on the chart there. Like I said, it was an hourly chart. I do focus in on the hourly chart. Are you talking about pivot point trading, TD? You're asking historically, how does the plotting of supply demand levels compare to pivot? Okay, yeah, that's what you're saying. How does it compare to pivot point trading? Well, I mean, you would have to obviously go back and do your own research, but there, in my opinion, there really is no comparison. I mean, it's I would tell you that, you know, original supply and demand produces, you know, just tenfold better. But again, that's based on my own research and, you know, so on and so forth. So very good to answer your question simplistically. Let's see, move through the questions here. Let's see. So if there's no base, you look solely on the pivot level, or do I go to the lower time frame to find one? Okay, so you're at, you know, I never rely on a pivot level if it's not original, okay, unless it's with the trend. I'm not going to go into all of that right now. We'll focus in on that in the live room. But you know, no, there's really no need to continue. I mean, let me put it to you this way. If you start on a larger time frame, right, and you work your way down to a 5-minute chart, you can almost guarantee that you're going to find a level. I mean, it's going to happen. So you got to ask yourselves, you know, do you want to be that trader that just forces the levels and forces the trades, or do you want to be patient, right? And that's, again, that's, you know, ask yourself that. I can't answer the question. I tell you for myself, you know, I'm very patient when it comes to trading. I can tell you today, it took me nearly all day to get these 2 trades on. Okay, we had another trade that we presented also on gold, but we didn't get that fill. But you can look at all of these levels that we have marked in. These are marked in the live room well in advance, right? So you have the opportunities if you want to trade accordingly, right? Just like, for example, right now we have a level drawn in right here. This is in advance. We haven't revisited that yet. However, this level we did, great buying opportunity, and so on and so forth. Yeah. So I would tell you, try not to force it, okay? Try to be very patient. Choose a time frame and stick with it. Yeah. Givo, I hope I'm pronouncing that right. You know, it's a 60-minute. That's what I trade. That's what we trade in the live room. Yeah, it's where I find the levels, right? Because a lot of people will dial it down to the smaller time frame, but you know, honestly, guys, I've just found that I do better when I don't, because the market makers and so on, there's a lot more a lot more sweeping stops on the smaller time frame, a lot less sweeping stops on the larger time frame. So I much prefer the 60-minute chart. How many trades do we trade in a day? Oh, today, as in current today, just the 2. Yeah, so you can, both trades that we've placed, you can still see. Well, excuse me, both trades that we've gotten filled, they're still up. Yeah, I mean, so you can see both of them have hit profit targets, and now they're both just runners with the second profit target. Yeah, so we took our profit target right into this area of resistance. Okay, so we try to get, you know, massive profits. We're looking for a minimum of 2 to 1s. We're looking for 3 to 1s, and so on and so forth. But yeah, so just the 2 trades actually got filled today. Could I explain again how to know a level without a base, just the pivots? Okay, it's a very good question, okay? It's very important that you guys get this. A pivot point is not being the same, right? ask yourself the two questions. A, is it fresh? Okay, in other words, have we been to that level before? Because that's going to tell you if it's fresh or not. But in order to determine if it's a pivot point or not, go back to the left. Put you a horizontal line on the bottom of the pivot point low or the high of the pivot point high, okay? And just scroll back left. That's it. That's as simple as it can be, right? So, pick a market, right? I mean, any market. If, for example, we'll do it right now. I would ask myself, this level right here, okay? Is that a pivot high, right? Or is it fresh, supply? And then scroll back, okay? And look at where it lands, right? You can see that that's a pivot point. So would we be willing to short the markets? No, absolutely not, right? Because that's a retest of a previous level. Make sense? Great question, by the way, guest 4. Thank you. Do you carry positions overnight? Do I share emails with anyone? No, I don't share emails. No. Are you in, David? Are you actually in our live room? Is that why you're asking? Oh, okay. Oh, so no, you're not. But no, I absolutely never. That's a privacy deal there. So all of your information with us is completely confidential. So yeah, no, none of your information or your emails will ever be shared with others. Okay. Yeah, a great question though. But to answer the question about carrying positions overnight, sure. I mean, you see, I've done it right now, right, with two trades. I prefer not to hold them over the weekend, however, because I have to be in a very good position to hold it over the weekend. Yeah, but yeah, all the time, I'll absolutely hold a position overnight. It's not required. As a matter of fact, sometimes if I would have just closed my positions, I would have made more. But it's just my style of trading, right? So yeah, I mean, again, you can see that I'm still in the S&P and still in the NASDAQ trade. Let's see here. Guest 6. I think your question. I think I already answered your question. You were asking me to define. It's a good. I think this is humorous. You asked, please define the fresh and original levels for a 6-year-old. Okay. In other words, in layman's terms, yeah. But I think I just did that. I think your question came in before I answered it. In other words, literally, go put a horizontal line on top of a pivot point high, or go put a horizontal line on the bottom of a pivot point low. Simply scroll left. That's it. That's it. That's all that you're required to do. Okay. Look at this, for example. You see this this pivot point right here. Okay. I'm not interested in trading out of this if we come back to it, because that's not an original level of demand for me, right? Does that make sense, everyone? I hope so, because look at where it's coming from. It's just a retest of the original level of demand, in which we've been there about 4 times. So the probability would be that we'd actually push to the downside, not hold up. Okay? All right, great question. Hopefully that did it pretty good. Steve asks, do you ever use trend lines in your analysis? Oh, absolutely, Steve. Yeah, absolutely. More than you know, right? Absolutely. That defines a lot of things for us. We're pretty big on trend lines. Yeah. Let's see. Dennis, you're struggling to determine how far back you're saying? You're struggling to determine how far back the area has been violated. It doesn't matter. Like I say, it doesn't matter how far you have to go back. You go back as far as you have to, right? In other words, you just keep going until you find price. If that level has been traded through, then it becomes irrelevant. So let me give you an example, okay? Let me remove these lines, all of these that are no longer relevant for us, and we'll just move this back, okay? All right. Sorry if I can draw this in. Well, I'll do that later. Okay, look to this level right here, all right? I'm absolutely I'm not interested in this level whatsoever, not even a little bit, okay? So when we came back up to it, I cared less, right? The reason there is because it's already been there before. We've already made money out of the level, okay? And once you violate through the level, Okay, right here. Once we violated through that level, you have to know that all of the sell orders that were there at one time have now 100% been consumed. Otherwise, there's absolutely no, it's impossible to trade through the level. Okay, as long as there's still sell orders there, you can't trade through it, right? You have to consume all of the orders in order to go through it. So in other words, we don't cut through candles. Yeah, absolutely. That's not right this moment. Elam Ronnie. Yeah, that's sorry, we're just cutting the time here. But if you want to jump into our live room, we'd be happy to do that. Yep. If you use trend lines, do you use them to anticipate / predict a channel possibly forming? Okay, anticipate, yes. Predict, yeah, I understand where you're going with that. Yes, but at the same time, I only use that for confluence, right? So, in other words, I'm not going to just jump out and trade or place my money in the market if there's not a level of order flow there, right? So just because it lands on a trend line doesn't really mean that I'm going to be placing an entry. And if there's a level there, however, and it lines up with the trend line, then absolutely, and we would anticipate a very large move out of that. Okay. I'm sorry, guys. I'm going to run through a few quick questions. We're already over time. I'm going to give just about 2 more minutes, and I'll jump out of the room. All right. Let's see here. Is it better to trade markets with much money to get clean supply and demand levels? I'm sorry. I'm going to have to move through that question as I don't really understand it. Okay. Yeah, I apologize about that. I can't tell you about the recording, Michael. I'm sure that the guys here, Josh and Paul will take care of that. All right. How do you know that it's reached the absolute bottom level of demand? I mean, there's a million different levels, right? We just have to find the ones that are most recent. Yeah, the ones closest to current price. Yeah. Okay, guys. I don't want to keep these guys too much longer. I want to say I really appreciate you guys taking the time out of your day to educate yourselves on supply and demand. I really hope I hope that I've helped some of you. If you have any questions, be absolutely happy to address those. Just send them to support@purefinancialacademy.com, guys. And again, you can check out the trading blog. You can get a free trial into the room via the left-hand column there. You can see where it says free 7-day trial. So we'll put you in the room, let you see exactly how we analyze the market, trading setups, each day, and so on and so forth. And without further ado, thanks for all the kind comments, guys, below. I see that. My regards to all of you as well. God bless. I'm going to turn this back over to Josh or Paul. And I hope that you all have a very wonderful rest of the day.
All right. Well, thanks a lot, Will. We really appreciate you coming in to present here today, and obviously we appreciate you staying on to answer all the questions that came through. There seemed like there were a lot of good questions, so hopefully everyone who sent in their questions were able to have them answered. I did want to just remind all of the participants that are still in the room that we did record today's session, so be on the lookout tomorrow for a link to that recording, just so that you can review the session again if you are so inclined. But that should do it for us here today. Again, thank you, Will, and thank you to all our participants who came into the room today. Obviously, we appreciate you coming in for this webinar series, and hopefully we'll see you back here in the coming days and weeks for another Mirror's Future webinar. But until that point in time, I hope you guys have a great rest of the evening, and hopefully we will see you again real soon. Take care.